Welcome to your real estate market update for December 2022. Hard to believe this is our last update of the year. Well, in today's update, we're really going to touch on three main areas. 2022 has been dominated by mortgage rates. So we're going to take a look at that and share what the experts are forecasting going forward, and then touch on affordability, on how mortgage rates have really played into affordability for home buyers, with an interesting comparison with regards to that affordability to last year. And then stick around till the end, as I'm going to share what the latest forecasts that have just come out have to say about what we should expect in the housing market in 2023. Hi, this is Andrew with the Andrew Smith team here in Frisco, Texas. And as I mentioned right at the beginning, 2022 has really been defined by mortgage rates. As a matter of fact, mortgage rates more than doubled this year. And we've never had a year like that before. There's never been a year where they've actually doubled. As you take a look at this slide, you can see what I'm talking about. All the way back in January, we started the year right at around 3.25, just below that. And rates went all the way up to just over 7.25 in general in many places. And then for the last 4 weeks, rates have actually come down. Well, as fast as rates went up in 2022, the decline that we've seen over the last 4 weeks is actually the fastest decline in mortgage rates we've seen since 2008. So without a doubt, it has really been a roller coaster with regards to mortgage rates. Now, as Glenn McBride from Bankrate says here, is mortgage rates could pull back meaningfully next year if inflation pressures ease. And one thing to keep in mind, especially if you've seen some of the videos we've done in the past, is that inflation is the enemy of long-term mortgage rates. So as the inflation numbers have started to come down, and hopefully they continue to come down in a meaningful way, we should continue to see mortgage rates also come down. Most of the forecasts that I have seen right now believe that rates have peaked and that we will start to see rates come back down. How much rates come down honestly depend upon whose survey you look at. I've seen forecasts saying rates could get back to 5%. I've seen some saying they'll hover just below 6% for most of the year. I've seen others right around 5.5. Bottom line is, most people are forecasting that rates are going to end up in 2023 somewhere between 5 and 6%, which is great news. The number that I'm looking for, to be honest with you, is right around 5.5%. And the reason I say that is there was a distinct difference in the amount of activity that we saw in the marketplace once rates crossed 5.5%. Up until about 5.5%, you actually saw buyer activity remain fairly strong. As the rates got above 5.5%, then you started to see that buyer activity start to drop off. Now, one thing that's an interesting comparison here that you might not have considered is, as you know, in 2021, it was dominated by bidding wars, multiple offers, rapid run up in home prices that left everyone mainly frozen out. I can't tell you how many buyers that we were working with where we were writing offers 50, 60, 70, 80, 90, 100, 130, $40,000 over the list price and not getting the home. It was a complete frenzy going on, as you might recall. Here's one thing to keep in mind when you start looking at this year compared to last year. So imagine a home that is listed for $550,000. $550,000 in last year's market would have received multiple offers and would have sold for substantially more. So in this example, let's just say that that home actually finally went under contract. The winning offer was $675,000. Now, if someone was to put 20% down, the loan amount on that would be $540,000. Now, if we assume a mortgage rate right at 3%, the monthly payment would be $3,936 for principal, interest, taxes, and insurance. Okay. The total amount due at closing would be $139,000. Now let's fast forward a year. The bidding wars are over, right? They're not happening anymore. So let's take a home listed at $550,000 today. Chances are you're going to be able to buy that home for $540,000 or maybe even a little lower, but let's say $540,000 at 6.25% interest rate, which is where they are today. Your monthly payment on that would be $3,952, $16 a month more than what it would have been last year at 3%, even though the mortgage rate is substantially higher at 6.25. Not only that, the total cash needed to close, assuming that 20% down payment, is $112,000 as opposed to $139,000. So yes, rates have jumped up substantially, but with home prices backing off the way that they have, there's actually more opportunity in the marketplace today than there was a year ago for people that are in that position, for people that it's a good time for them to consider making a move. And with that in mind, I know many people with the uncertainty, which we're going to jump into in just a second here, are we going to keep seeing prices fall? Is the bottom just going to fall out? Is it going to crash? Is this going to happen? Is that going to happen? And the honest answer is nobody knows for sure. But here's what I can tell you is that home prices overall, no matter what, are always going to be influenced by supply and demand. Right now, what we have is supply is being impacted by new construction and resale. Many potential resale homes have not come on the market or have been taken off the market if those homeowners didn't truly need to sell. I mean, if you've got a house that's working for you, you don't really need to sell, you don't need more space, you don't have to downsize, it's not a job transfer, it's not a divorce, it's not anything like that, and you're sitting in locked in at 3%, are you going to trade in that mortgage for a higher priced one? Well, it depends. As I showed in the example previously, or explained in that example, it might not be that bad or that much of a difference on payment. And if rates do come down another percent or so, the refi option is always on the table. So we are seeing people make that move. But right here, what you're looking at now is month supply. Supply is part of what drives that equation. And although supply ramped up rapidly, Prosper is identified in red and Frisco in blue on this chart. It actually, this is as far as the month supply goes, it started to come back down, which is normal this time of the year. But to be honest with you, we're running at supply levels similar to where we were at the end of 2019. And I say that because 2019 was a very good year. It was more of a normal year. It was the last pre-pandemic year. So whenever we're comparing things to 2022 and 21, and even parts of 20, the second half of 20, it's not that legitimate of a comparison because those were definitely abnormal markets overall. Now, looking into what to expect next year. Okay, Ali Wolf, chief economist of Zonda, as she said, the housing market is expected to face continued uncertainty heading into 2023 as consumers, financial markets, and policymakers work through their respective challenges in today's economy. And I think that's pretty key, to be honest with you, because there's a lot of people that are just really uncertain about what the future holds, and that's holding people back. And there's certainly nothing wrong with that. I'm not suggesting now is a time to put your house up for sale. I'm not suggesting now is a time to jump into the market and buy. It may be for some, it may not be for others. My goal here is simply to try and share this information with you to let you know that there are opportunities out there if now's the right time for you, right? And that's going to be a decision that everyone needs to make for themselves. What I can tell you is looking at next year, the expert forecasts are absolutely all over the place, especially as it relates to pricing. I have actually seen forecasts recently as negative as saying that we're going to fall, home prices are going to fall about 20%. Now, remember, anything that's being forecast out there is really talking about peak to trough. Okay, they're not talking about from where we are now, but peak to trough. The consensus seems to be, by many of them, that declines of somewhere between 5 and 10% is what we could expect. On the flip side, I've seen some other recent forecasts that say, well, actually, we think prices are going to increase anywhere from 3 to 4%. So again, even all of the experts, the analysts, are split on what is going to happen. So nobody knows for sure. What I do know, and what we're seeing here, is that our median price here in Frisco and Prosper, and I'm going to show you on this slide right here, we peaked in April and May. April was the peak in Frisco. May was the peak in Prosper. And since that time, between then and August, we saw prices decline. As a matter of fact, prices are down in Prosper during that time 13%, and prices in Frisco actually dropped 17% during that time. But as you can see on this chart, if you look at the far right side of this graph right here, August is when our price decline stopped. And we've actually been treading water since August. We haven't really been doing much. Prices have been holding fairly steady. As a matter of fact, they actually ticked up slightly in November. And that uptick that we saw in November is not something that I'm expecting to be a new trend by any means, but it just goes to show for the last few months, we've actually been holding fairly steady. And to be honest with you, that's what I'm seeing, or more, I think what we're most likely to see going forward in our market here. Could there be a little bit additional softening on prices? Sure, there could. There absolutely could, depending upon what happens overall. But we're not going to know where we're actually going to come out until closer to February, as we start to see what happens as the normal busier season starts to get back in full swing. Now, next week, if you don't subscribe to my channel, I invite you to do so. Next week, I'm going to take one of those articles that I mentioned about the expert price predictions for 2023 and break them all down, just to kind of show you what the differences are across the board. So again, no one knows for sure. My goal each and every week with these videos is to bring you the information that you need in order to make the decision that's right for you and your family. If you have any questions whatsoever, please feel free to reach out. You can always send an email to contact@theandrewsmithteam.com or give us a call at 469-296-5230. In the meantime, I hope you all have a very Merry Christmas, a Happy New Year, and we'll see you on the next market report in January 2023.